Since we're talking about the future, what might Wall Street look like in 25 years? Will there be any traders still working at the New York Stock Exchange? Or will they all move to London, Hong Kong, or another financial hub outside of the United States? Kayla Tausche takes a look at how the future of finance might change.
Most big banks have already fled the financial district for cushier headquarters elsewhere. The New York Stock Exchange, one of the last holdouts here on Wall Street proper. But by the year 2039, what was once the epicenter of high finance might be just a relic, and the world's new commercial hub, oceans away. Since the late 18th century, Wall Street has been the world's premier trading hub. By 2039, it will be more of an idea than a place. Banks will lean on their core businesses of liaising between companies and investors, underwriting bonds and stocks, and making loans to consumers and businesses. Author and futurist David Woolman says that's how it should be.
I would like to see banks going back to being, community banks, irrespective of where they're located. Buttressing and empowering the local economy through lending and through securing deposits. They're pulling more people into the formal economy instead of necessarily just gambling on a collateralized debt obligation.
Consultants agree, saying the masters of the universe mentality will fade, regardless of the political climate. Companies will seek independent advice on mergers, complex trading will become automated, and sell-side headcount will shrink dramatically, especially in the financial centers. Emergence of new economic centers will follow GDP growth, like the one local Chinese officials are building in Shenzhen, laying groundwork for a working population of 650,000 and $25 billion in GDP by 2020, giving New York, London, and Hong Kong a run for their money. Competition will come from all over, international banks, big data, and peers in the shadows, says Dave Hoffman at PwC.
There will be a move afoot, whether it's a hedge fund or a different kind of entity. There will be other entities in the game. But the question is, who's going to really create the most frictionless customer experience? Who's going to have the trust of the consumer, whether it's a deposit or a loan account? And who are the regulators going to ultimately let in the business?
For Nightly Business Report, I'm Kayla Tausche in New York.